Welcome to Knowledge Nexus, where we break down complex financial topics into easy-to-understand guides. Today, we're diving into the essentials of financial literacy, budgeting, investing for beginners, and understanding credit scores. Let's get started. First up, budgeting. A budget is your financial roadmap. It helps you track your income and expenses so you can make informed decisions about your money. Here's a simple way to start. List all your sources of income and then your monthly expenses. Categorize your expenses into needs, like rent and groceries, and wants, like dining out and entertainment. A popular method is the 50/30/20 rule. Allocate 50% of your income to needs, 30% to wants, and 20% to savings and debt repayment. This helps ensure you're saving enough while still enjoying life. Use apps like Mint or YNAB to track your spending and adjust as needed. Remember, budgeting is not about restricting yourself. It's about making your money work for you. Next, let's talk about investing for beginners. Investing can seem intimidating, but it's crucial for building wealth over time. Start with understanding the basics: stocks, bonds, mutual funds, and ETFs. For beginners, consider using robo-advisors like Betterment or Wealthfront. They create a diversified portfolio for you based on your risk tolerance and goals. The key is to start early and take advantage of compound interest. Even small, regular investments can grow significantly over time. Also, educate yourself. Books like The Intelligent Investor by Benjamin Graham are great resources. Investing doesn't have to be complex. Start small, be consistent, and watch your money grow. Finally, let's tackle credit scores. Your credit score is a number that represents your creditworthiness, affecting your ability to get loans, credit cards, and even rent an apartment. Credit scores range from 300 to 850. Higher scores indicate better creditworthiness. Factors influencing your score include payment history, credit utilization, length of credit history, new credit, and credit mix. To improve your score, always pay your bills on time, keep your credit utilization below 30%, and avoid opening too many new accounts in a short period. Regularly check your credit report for errors and dispute any inaccuracies. A good credit score opens doors to better financial opportunities, so it's worth the effort to maintain and improve it. Financial literacy is a journey, and today we've covered the basics of budgeting, investing for beginners, and understanding credit scores. By taking control of your finances, you're setting yourself up for a more secure and prosperous future. If you found this video helpful, give it a thumbs up, subscribe to Knowledge Nexus, and hit the bell icon to get notified of our next video. Thanks for watching, and we'll see you next time.